Alright, let's play a quick thought experiment. Imagine this, you've got that unexpected expense, the car repair, the sudden medical bill, maybe just a month where everything seems to hit at once. You turn to a loan, like one from Mogo, to bridge the gap. You've got a plan, you're confident you can manage the payments. But then, life throws another curveball. Something unexpected happens, and suddenly, that payment deadline looms, and you know, deep down, you're not going to make it. What happens then? What exactly are the consequences of missing a payment on a Mogo loan? Does the world end? Do they send the repo men for your couch? Or is it something more manageable, something you can navigate? That's what we're diving into today. Because let's face it, financial hiccups happen. It's not about if, but when. And understanding what happens when you miss a payment is crucial for making informed decisions and managing your finances responsibly. Now, before we get into the nitty-gritty of Mogo specifically, let's take a step back and understand the general principles of loan repayment. When you take out a loan, you're entering into a contract. You agree to borrow a certain amount of money and repay it, with interest, according to a set schedule. Missing a payment is a breach of that contract. Lenders, like Mogo, rely on those payments to stay in business. They have operating costs, they have employees to pay, and they have their own financial obligations. So, when you miss a payment, it disrupts their cash flow and creates a ripple effect. The first thing that's likely to happen is you'll receive a notification. This could be an email, a text message, or a phone call reminding you that your payment is overdue. This is a standard procedure, and it's often a simple reminder. However, if you continue to miss payments, things start to escalate. Late fees are often applied. These fees are designed to compensate the lender for the additional administrative costs and the risk they're taking by lending you money. The specific amount of the late fee will vary depending on the terms of your loan agreement with Mogo. Furthermore, missing payments can negatively impact your credit score. Your credit score is a numerical representation of your creditworthiness. It's used by lenders to assess your risk as a borrower. A history of missed payments can significantly lower your credit score, making it harder to get approved for loans, credit cards, or even rent an apartment in the future. Now, let's bring it back to Mogo. What specific actions might Mogo take if you miss a payment? First, it's essential to be proactive. Communication is key. If you know you're going to miss a payment, contact Mogo immediately. Explain your situation and see if you can work out a payment plan or a temporary forbearance. Many lenders are willing to work with borrowers who are experiencing financial hardship, especially if you communicate openly and honestly. Mogo, like many other lenders, likely has a process for dealing with delinquent accounts. This process may involve sending you a series of reminders, applying late fees, and ultimately, if the default continues, referring your account to a collections agency. A collections agency is a third-party company that specializes in recovering overdue debts. They may contact you by phone, mail, or email, and they may be more aggressive in their collection efforts. This can be stressful and unpleasant, and it's something you want to avoid if possible. In addition to the financial consequences, missing payments can also have emotional and psychological effects. The stress of being in debt and dealing with collections can take a toll on your mental health. It can lead to anxiety, depression, and relationship problems. Now, it is important to look at the specifics of the loan agreement. It is there that all the specific information regarding late payment fees, collection procedures, and other important information resides. Here are some general tips for avoiding missed payments. Create a budget. Track your income and expenses to ensure you have enough money to cover your loan payments. Set up automatic payments. This can help you avoid forgetting to make a payment. Communicate with your lender. If you are experiencing financial hardship, contact your lender as soon as possible. Explore debt consolidation or refinancing. If you're struggling to manage multiple debts, consider consolidating them into a single loan with a lower interest rate. Seek financial counseling. A financial counselor can help you develop a budget, manage your debt, and improve your credit score. Now, let's address some common concerns. What happens if you miss multiple payments? If you miss multiple payments, the consequences will become more severe. Your credit score will take a bigger hit, and you'll accumulate more late fees. Mogo may also take legal action to recover the debt. This could involve suing you for the outstanding balance. What about Mogo reporting to credit bureaus? Yes, Mogo, like most lenders, reports payment history to credit bureaus. This means that missed payments will be recorded on your credit report and can negatively impact your credit score. Can Mogo repossess my assets? Whether Mogo can repossess your assets depends on the type of loan you took out. If you took out a secured loan, such as a car loan, Mogo may be able to repossess the asset if you default on the loan. However, if you took out an unsecured loan, such as a personal loan, Mogo will not be able to repossess your assets. Instead, they will likely pursue other collection methods, such as referring your account to a collections agency or taking legal action. What if I'm facing bankruptcy? If you're facing bankruptcy, it's important to consult with a bankruptcy attorney. They can advise you on your options and help you navigate the bankruptcy process. Bankruptcy can have a significant impact on your credit score, but it can also provide a fresh start for individuals who are struggling with overwhelming debt. Remember, it's always best to be proactive and communicate with your lender. By being open and honest, you can often work out a solution that avoids the most severe consequences of missing a payment. It is important to understand your loan agreement. Read the fine print and understand the terms and conditions. Do not be afraid to ask questions. Financial responsibility is key to navigating the complexities of modern life. By understanding the consequences of missed payments and taking steps to avoid them, you can protect your credit score, manage your debt, and achieve your financial goals. With that said, thanks for watching, and until next time.